Good evening, everyone, and welcome to the strategy of the week tonight, titled Riding the Bull. My name is Jerry D'Ambrosio, Senior Instructor with VectorVest, and it's my pleasure to present tonight's strategy for you this evening. Knowing whether we are in a bull or bear market plays an extremely important role in our investment strategies. VectorVest defines a bull market as one with rising corporate earnings. Dr. DiLiddo has often instructed us that it's okay to buy the dips in a bull market, but we should sell the rallies in a bear market. Tonight I will demonstrate how we analyze the market climate and how you can apply that analysis to your trading plan. I'll also introduce a methodology that was submitted by one of our subscribers. We'll call him Russ. Russ took a proven and effective VectorVest methodology and tailor-fit it to meet his investing goals. And we love when you do that. We love when you take something that VectorVest has presented and make it practical for you as the individual investor. So I'm going to start with the trading plan that Russ developed. So let's get started. I'll move us from the home page. I'll click on the backtester button at the top. So Russ sent an email to our research department a few weeks ago, and the general theme of that email was as follows. He always liked the Chairman's Choice model portfolio with the WOW winners. He also thought it was a good fit for him with his Roth IRA. He goes on to say that the WOW Surefire Success is similar except for the shorting part, which doesn't work in his Roth. So he started to develop some back tests and kind of just tweak our Surefire Success trading systems. And what he did was he just took no action on a confirmed down signal. And as you can see, we're looking at the last 4 years. So on December 22nd, that was the first confirmed up heading into 2010, all the way to current. 60% winning trades, about 197% gain, 48% a year, with only a 13% drawdown. And remember, this is holding through the confirmed downs. What we're learning more and more, especially over the last few years, is that investors aren't too keen on exiting and closing all of their positions every time we get a confirmed down, especially in a bull market situation that we've been in for the past 4 years or so. And that information is important. Knowing that you're in a bull market really helps in managing your portfolio. You've seen enough whipsaws in this current bull market to know that there needs to be a way to weather the storm during these short little pullbacks or short downturns that we experience in a bull market. So instead of closing all of his positions at a confirmed down, Russ took no action. If I click on Edit up at the top, he used the confirm calls as his market timing system. Now again, he really tailor-fit this to make sense for him in that Roth IRA. He didn't want to be trading in and out. He didn't want to place too many trades, so he used our most conservative timing system, the confirm calls. Now this section here in the backtester does require the auto tester module. Auto tester is an add-on module. We have provided a link in the VectorVest views for you to take out a free trial. And we're also really excited about the new feature in the auto tester called the auto timer, which does in real time what the backtester has been doing for years with historical data. It allows you to take a trading plan, move it very easily into the portfolio manager so that you can paper trade it or trade it with real money going forward. So again, the auto timer in the portfolio manager is simply a new feature in the auto tester. But again, in the VectorVest views tonight, we do have a link that you can try it out. I'll go down and click on Next. So he used the WOW winners with a 30% gain, 10% loss. Now this is the same stop combination that we're using in our Surefire Success trading system. If I go to more settings, he's managing a 10 position portfolio. Again, this just made more sense for him in his IRA. He automatically wanted to replace closed positions, and he opened all 10 positions immediately at the confirmed up. When entering this situation, he didn't want to close any open positions. Now this is going to make more sense once I talk about the rules for the confirmed down. When he entered into a confirmed down situation, he took no action. He didn't close all of his positions. He left his existing positions open until their stop criteria is met, but he did not open any new positions. He allowed his portfolio to just evaporate and extinguish naturally. And that's key here when talking about bull market strategies. And this is something that can be done in a bull market. We wouldn't necessarily suggest that you employ this same methodology in a bear market because those downturns are a lot longer And chances are those bullish positions that you're holding through the confirmed down will get stopped out at a loss. What tends to happen here in a bull market is that you're just weathering the storm while investors are getting ready to buy the dips. So he just let his stops take him out and not replace any closed positions during that confirmed down situation. When the market stopped falling and started rising again, when he entered into a confirmed up, he didn't want to close any open positions. So he may still have had bullish positions in his portfolio that did weather the storm, made it through the confirmed down, and are still in his portfolio at the confirmed up. So he didn't want to close those. Hope that makes sense for everybody. If I scroll down, you can see that he invested the average portfolio value. He bought odd lots. He limited repurchases. He didn't want to repurchase a stock that he currently owned. And because he's trading in his Roth IRA, he didn't have to worry about the wash sale rules. So the wash sale rule says that you can't buy back a stock that you've sold for more than 30 days after you sell it. There are some tax consequences there. Well, since he paid all of his taxes up front and he trades in that Roth tax-free, he didn't have to worry about that. If he did happen to sell a stock, he could theoretically buy it right back. So he didn't have to account for the wash sale rule. He just didn't want to repurchase a stock that he currently owned. And to make sure that we're not buying more shares than we actually could buy, we're going to lower the stock's minimum average volume down to 2%. The test period was December 22nd, 2009, all the way to current. And you can see by that equity curve, now that's just beautiful. Very low drawdown, especially going through a rough 2011 and 2012. Here's 2011. And to find a methodology that performed this well in 2011 is just fantastic. Not a lot of drawdown here. Sure, there was some pullbacks, but you have an equity curve here that's continuing to hit higher and higher highs. Let me just move into a market timing graph real quick and zoom in here on just about 2011. So this is what the market did in 2011. Very choppy, very volatile. I can really only see one or two major uptrends, and I wouldn't even call this one a major uptrend. So going back to the backtester and scrolling back here on 2011, much different picture here. So it performed very well in that choppy market and in 2012 as well. And if I click on the next run, now this is the beginning of 2013 up into current. Very nice equity curve as well, just about a 40% annualized rate of return, 71% winning trades, and only a 6.25% drawdown over the last year. And I know that 2013 was a phenomenal year, but the S&P went up about 23, 24% maybe. We well outperformed the S&P 500 with very little drawdown, just about 6%. So let me move back to the 4-year test. So Todd Schaefer and I took a look at this research and said, you know, we have to present this week. We took it to Dr. DiLiddo and he loved it as well. But he wanted to make sure that I pointed out that this type of a methodology should only be implemented in a bull market situation. So you might be asking, well, how do we know whether we're in a bull market or a bear market? Let me now move us from the backtester to a market climate graph. I'll click on graphs from the main toolbar, change it from a market timing to a market climate graph. Now this graph is a very underutilized and often overlooked section of the VectorVest program. It's here where we track the trends of the 3 major movers of the market: earnings, inflation, and interest rates. We're looking at a 1-year graph here. The actual S&P earnings are represented at the top with this green line, and you'll notice at the bottom it says S&P earnings VV. This is our trend indicator of the S&P earnings. I'm going to expand this and pull it out just about 4 years or so. And as you know, a lot of the VectorVest core proprietary stock analysis indicators are on a 0 to 2 scale. Above 1 is favorable, below 1 is unfavorable. So how do we know that we're in a bull market? Well, as long as earnings, or more specifically our trend indicator that tracks the S&P earnings, as long as this indicator is above 1, we are still in a bull market situation. This here is the trump card. The other 2 factors, interest rates and inflation, they're currently rising as well. I'll talk about that once we get into the VectorVest views in a second, but as long as earnings are still rising according to our method of analysis, we are in a bull market. And you'll notice that we signaled a bull market right back here on January 29th of 2010 when our indicator crossed from below 1 to above 1. And as you can see, as of late, this indicator is really starting to accelerate to the upside. If I go back to a 1-year graph, you could see that much better here. We're starting to stair step up, earnings are still rising, and our indicator is strengthening to the upside. I'll go back to a 4-year graph. So all you really have to do is follow the VectorVest indicator for S&P earnings. Once it crosses below 1, that will change the situation from a bull market to a bear market. And therefore, your investment strategies must change as well. And you can look at this market climate graph as just that. It's a strategic tool that provides a general plan that you must follow. And that general plan might include holding your stocks through a confirmed down situation and just letting your stops take you out, not closing all of your positions every time a new down signal comes. But what you don't want to do is you don't want to replace those positions during that confirmed down, just as I demonstrated with Russ's trading system. Now, the market timing signals in VectorVest, whether it be the primary wave, the green light buyer RT kicker, the confirm calls, those are more tactical. They provide you with a specific plan that you develop to achieve your investing goals. And the color guard, well, that's your action plan. That identifies the current trend and really lets you know what you should be doing on a day-to-day basis. So let me close with one last thing. I'm going to come up to the views, and we're looking at last Friday, January 17th, and this is the market climate graph. And all of those things that you pay no attention to on CNBC, like consumer prices, the Philly Fed survey, housing data, jobless claims, all of that is included in the climate section every week. And if I scroll down, I'll read the summary here at the bottom. It says our composite of investment climate indicators shown below fell 0.02 points to a level of 0.91. Now that's unfavorable. The major mover last week was the CPI inflation, whose indicator fell 0.31 points. Now this is our trend indicator of the CPI inflation rate. So what this means is, since our VectorVest trend indicator fell, that means that inflation is rising. Right? Rising inflation is not very good for the stock market. So that being the case, our indicator when above 1 is favorable, but when it's below 1 and falling, that's unfavorable. It says our forecast of S&P 500 earnings rose 1 cent to $4.40. Its indicator remained unchanged at a level of 1.12. We currently have a case 4 bull market scenario in which earnings, inflation, and interest rates are rising. And below that is basically just a chart of all of the indicators, their current levels, and the VectorVest 0 to 2 scaling of those levels. And if I scroll back up, in parentheses here, it says see VectorVest views on March 21st, 2003, and a few more dates here for more information on various bull and bear market scenarios. So let me change the date up at the top to March 21st of 2003. This is the first time that Dr. DiLiddo wrote about the truth chart, and it's in the overview section. And here it is. We are currently in a case 4 bull market scenario, which earnings are rising, inflation is rising, and interest rates are rising as well. You'll notice though in the comments section it says bull market ends. Dr. DiLiddo has also said many times that case 4 bull market scenarios can last for a very long time. As long as earnings is outpacing the rise in interest and inflation rates, we're okay. Earnings, again, is the trump card. And as long as the VectorVest indicator of the S&P earnings is above 1, we will be in a bull market. So I hope you all enjoyed tonight's presentation and have a better grasp on the importance of bull and bear market situations and how that has an effect on your investment strategies. We will be holding a live Q&A webcast on Monday at 2 p.m. Eastern Time. You can register for that webcast either from the views this evening or from that website you see there. And please join us if you have any questions about tonight's strategy presentation. That's what these are for. We'll be more than happy to take the time and answer any questions that you have. This concludes tonight's Strategy of the Week presentation. Have a great weekend, everyone.